Hey, how's it going? Here we have a beautiful table of stocks that have multiple upside. That's not mine. I have stolen this from internet, from some of the X profiles, but it doesn't matter. It's just a beautiful example how people fantasize about their stocks going to double, triple in no time, and they have a huge potential, huge upside, blah blah blah. But then you are buying one of those stocks and you see how it's sliding down, and it's not, instead of making you a triple or a quadruple, it goes down 30% or 50%. What's wrong here? I'm going to show you my method, my indicator, which helps me to analyze stocks, gold miners. And here is my Grok profile, and here is the prompt I'm using. Okay, so here you can see the formula. It is EV plus capex divided to free cash flow. And what I'm asking Grok to do is to find the market capitalization, cash level, debt, then to calculate enterprise value, consequently, then to find out when they start full volume production, which year is the beginning, then to find if available production guidance, or estimate if it's not available, then to estimate capex, find or estimate all-in sustaining costs. Okay, so it's important to keep it in this sequence because Grok must do everything step by step. Okay, any AI can just shift and jump, so it's dangerous, and you better keep it doing step by step, because otherwise you can have all broken. Okay, and I indicate the gold price, current gold price, 4,700 USD per ounce. Okay, now it's slightly more, but okay, let's take this. To calculate free cash flow, because they know, Grok knows production, all-in sustaining costs, so, and the gold price. So now it's possible to calculate free cash flow for the first year of full volume production, and use the formula enterprise value plus capex. Why I add capex? Because I want to know all the costs that that I'm paying for. Okay, so what is the enterprise value actually, for those who don't know? It is the price to buy a company. So when you are buying a company, you are checking, okay, they have this debt, so this is a market capitalization I'm paying, so I'm buying at the market price, plus debt because I need to repay their debt, and minus their cash, because cash I'm receiving, right? And to this, I'm adding also capex, capital expenditures needed to start the project. And I'm asking to calculate enterprise value plus capex divided to free cash flow for the first year. Okay, so that's not the total free cash flow. And I'm not using NPV here at all. So I'm not calculating NPV. Why? Because market doesn't calculate. The market doesn't care if you have a huge NPV and the stock is cheap, like somebody says. Okay, but the market is not buying this. So we need a fundamentally different approach to estimate. Let's try my approach and see where we can go. First of all, let's take Alten Gold, and I'm not discussing the owners, which are a bit suspicious, and they have somewhat unclear reputation from the past, but let's just stick to the numbers and not discuss the reputation, okay? So we take the market capitalization. Some cash available here, they're slowly repaying the debt, and here we have the enterprise value. They need zero additional capex, and first year of full production is right now 2026. Okay, so we are doing the calculation and we have 2.7x. So enterprise value divided by free cash flow is 2.7, which is not so much, which is interesting, you might think. Okay, let's take the second one. It's QGR. It's Q Gold Resources. It's a company from Oregon. Somebody says it can be difficult to get a permission in Oregon, but Grok told me the chance is 80%, so it's not so low chance. They will need a lot of capex to start. They would need around 290 million, and the current enterprise value is around 33 million. So first year free cash flow, amazing. It will be 471 million, and we do the calculation. The result is 0.68. But okay, but when? Earliest first gold is 2029. So full volume, steady state average production estimated 2030. Okay, that's considered. There is no problem with permission, but still, is it cheap? Is it expensive? Of course, it's cheaper than compared to Altin, because Altin was 2.7. But okay, just let's move further and let's check other options. Okay, I'm taking Australian company Auric Mining, AWJ, in ASIC, and that's a small-scale gold producer in Western Australia. They currently have a lot of cash. They already made a trial pit in this year, and Munda starter pit, it's called, and they are constructing main pit. They are preparing to start main pit soon, and I believe it's 2000. Yeah, okay. 2028 is first year of full volume production, and let's calculate. And it's telling me this ratio, the same ratio, is 0.38. So okay, then my question is, why should I buy a company from Oregon and risking permits and risking how they finance this? Because each time they raise, they will dilute, of course. The only way to find finance is to dilute, or to sell the company to another company, but this doesn't give you the full price you expect. And people are telling me that that company is 20x or whatever, that one QGR, but I'm seeing it is in 2030, and it's going to give me this ratio of 0.68. You have also risks concerning permits, and let's compare to Australian miner, WJ, and this ratio is 0.38. Friendly jurisdiction, no risk of permit. Already they had the starter pit. Already they have money, and it's faster. So 2028 compared to 2030. And just nobody is talking about this company. Okay, I'm taking another company, is Santa Barbara Limited. Recently, they sold a part of the Simberry Gold project to Lingbao, and they received half billion, yes, for 504 million Australian dollars, and now they're having half billion of cash at this moment. They're having zero debt, just 2 million. And the current enterprise value is 263. They're making calculation only for Simberry project, and they're having the ratio of 1. Okay, so you might say that AWJ, Auric Mining, is a small company, so okay, it's risky and the market doesn't recognize. But this one is much bigger, and similarly, it has very low ratio. And what is the most important here, I didn't even consider another big project. They have an NPV of around 2 billion, which is in Canada. And yes, it also belongs to Santa Barbara. And it's not even covered here. But I don't want to interrupt Grok because, okay, maybe they just sell it. Maybe they don't want to start, and then it adds even more money to the company, and you have enterprise value around zero, because of course it's possible to sell a big project for around 200 or 300 million. They can do this and focus on this PNG project. Okay, but maybe that's coincidence, and PNG is not the great jurisdiction, so let's take something else. It's Medallion Metals in Australia, and okay, I skip this. You can check yourself, but they are starting very soon. They're going to be in full production in 2028, and that would be less than 1. This EV plus capex divided to free cash flow will be less than 1. Okay. And that's Australia. That's not. You have no permit risks. There is no risks that your mine will be confiscated like in Africa or some Latin America countries. You have no cartel, and it's very easy. Okay. And then it's another but okay, we want to start earlier. There is another company, Lannan Metals. They are situated just in the middle of the gold fields, and they are increasing their resource. They have doubled their resource in the last 2 months. Imagine, so they can increase really fast. And okay, I'm skipping this and to give you the result. Okay, it's 2. So this ratio is 2, but they are already producing and they have cash. They're already producing, and they're increasing their resource at the same time. So, okay, another option. And let's take Jaguar Mining, because everyone likes Jaguar Mining, I believe. And everybody says it's cheap and it's cheap. I don't want to argue it's cheap. I mean, all gold miners are cheap. But here you have this... so it's 1.53, okay? And when is the full volume? 2027, so it's next year. And that's in Brazil. So why to take risks of Brazil while you can have something in Australia? That's a question. I don't have an answer. Cerrado Gold, many people like Cerrado Gold, and here it shows it's actually interesting. It's 1.2. It's not so bad. And they have some risks, of course, but you may want to stop this video to read. I don't want to go in details, but Cerrado Gold could be interesting. Mako mining, big part of which is in Nicaragua. And you can see the market cap is 600 million. And so that the year is 2026. And 1.8, that's not cheap. I mean, that's not cheap compared to the options that you have, right? So you can have Australian miner, which is already producing. Mako is already producing too. But when you consider Nicaragua risks, you cannot say this is 20 or 10 or whatever X. Of course, you can buy all the companies and they are all fine. But then you are surprised why your company is your share is stock is decreasing by 30%. You don't know the reason. So I'm showing you the reason. And here is Tudor Gold. Everybody seemed to love Tudor Gold, and they might start producing 2032. Imagine 2032. Grok says that. I don't know. And this ratio, this indicator is 1 to 1,5. And that's not cheap. And that's in 2032, imagine. Why to buy such a company if you can buy Auric Mining, if you can buy many other interesting companies which already will be in production next year or 2028. You don't need to wait. And cash rich, so they have more cash to start. Okay, another is Flagship Minerals. It's a company that is doing a project in Chile. And again, this is for 2029. Okay, 2029 is full volume steady state year estimate, 2029, right? And I missed it. Okay, it's 0.53. 0.53. It's cheap, but it's not a recent production at all. Plus a lot of risks, and they need to raise capital for this production. Okay, so why I'm doing this? I want to add some sanity to mining community. I want that people understand what exactly is going on, what they are buying. And okay, I'm going to show you again my prompt so that you could use it or copy. And feel free to write me a message, to send me a DM. If you cannot, you can just add me. I will add you back, and so that you can send me a message. And I'm happy to discuss. I'm happy to discuss this in the comments. Write what do you think. And if you have any investment ideas, please send it to me to direct mail. And If you cannot buy Australian stocks, I'm happy to share my Interactive Brokers reference link with you. So just DM me and I'll share that. I would like to have a feedback from mining community. So please share this video, share this post with the others. Feel free to use this formula. Feel free to do whatever you want with this info. I'm sharing to you, and let's share thoughts and let's make better investment decisions. See you.